Derek Robbins. I'm joined here by Tyne Hugo. He's going to talk to us today about corporate tax. So Tyne, what is corporate tax and why is the UAE implementing it?
Well, that's the question on everyone's lips, Derek. Corporate tax, as the name suggests, is a tax on corporations. Now, that is any business. It's a business tax, so people mustn't stress about their salaries being taxed. You're still going to be entitled to your tax-free salary for the foreseeable future. But for companies and any business that runs, whether it be a sole prop or a company itself, that will be liable to pay the corporate tax. As for why the UAE are implementing it, that's just another step that they're taking to transform their economy from the reliance on oil into a more modernized economy.
Oh, interesting. And do we know what the rate will be?
Yes, in fact, there's two rates. Now, effectively the two rates are 0% and 9%. And the figures that determine which rate you're on is the amount of 375,000 dirhams in taxable income, which is effectively your net profit. Now, the amount of 375,000 isn't going to be foreign to people in the UAE, as it was the threshold for registering for VAT. However, this isn't a threshold. It doesn't mean that if your business is only earning 100,000 in net profit a year that you don't need to register for corporate tax. You do. All businesses will be liable to register for corporate tax currently as things stand.
Okay.
And it just means that if your net profit's only 100,000, when you account to the FTA, you won't be liable for any practical tax. It'll be a 0% rate. So to give you an example, if your net profit is 1,375,000 dirhams a year, then for the first 375, it will be 0%. For the next million, it will be 9%. So your final amount will be 90,000 dirhams that you pay them.
Interesting. So now we know what the rates are. Who will be liable for corporate tax?
Well, as I was saying earlier, it's going to be businesses. Now, people mustn't think that if you're just running a sole prop or something on your own, that you don't actually own a company to do it, that you're not going to be liable for this tax. It's going to be anything where you are required to get a license to carry out your activity, any business activity, save for the exempted ones. You're going to be liable for corporate tax. So person, company, I mean, their target is companies. That's the main target, because people running their own businesses without a company is a lot smaller group, but they do exist, and they must realize that they're going to be liable for tax as well.
So corporate tax isn't just for companies, but
No.
for anyone who is registered to trade effectively.
Any business, yeah.
Okay. And who are the exceptions or the exemptions?
There are some exemptions. They're not high in nature, but there are some. Basically, government departments will be exempt. Government-owned companies that carry out like a single relevant activity will also be exempt. Charities will be exempt. Certain investment funds will be exempt, provided they meet the criteria, and there's a very specific criteria to meet. Social security and retirement funds will also be exempt. That's the idea. Now, people mustn't mistake exemption from being liable to only pay 0% rate, which in the free zones, provided again that you meet certain criteria, you will only be liable to account to the FTA but pay 0%, because that's the promise the UAE government made when inviting people to establish companies in the free zone. So provided you meet the criteria, you still need to account to the FTA, but your final amount payable will be 0%.
Interesting. And how will this corporate tax be calculated?
Well, the exact method is quite a complicated thing, but for layman's terms, it's going to be your net profit. Now, your net profit, how you get to it is simply, it's your gross profit less your expenses and whatnot, and it's the final amount that's left at the end of the year. And that's going to be generally the taxable amount, provided you don't make a loss. Now, if you make losses, you can carry them forward Also, not the whole loss. It's generally in the range of between 75% and 50% of the loss you can carry forward, depending on certain criteria again. And you can carry them forward for a few years currently, as the aim is. So it's not just the next year. It will be able to be carried forward until you've utilized that loss, and then you will be liable for tax again on your profit.
Okay. And finally, what common sense advice would you like to give to businesses to prepare for the coming of corporate tax?
Well, that's the key word, prepare. When VAT was implemented, people just thought it would constantly be delayed and it wouldn't get implemented. And when it was finally implemented, there was a bit of panic. Corporate tax is coming. It's not some myth. It's not something that will come in the next 10 years. It is coming. They are aiming to have it established next year. That will be the start of the financial year to account for corporate tax. It is coming. In the UAE, there's a lot of things, especially in the smaller businesses, where people don't keep proper books of account because it's just single-owned companies, and they've never needed to. And that's going to have to change. Start keeping proper books of account, because you're going to need them when you account to the FTA.
So your advice, Tyne, then is be proactive and get your house in order now rather than pay penalties later.
Absolutely.
Well, thanks very much for your time.